Coming up this evening, live from New York City, an energy expert warning about blackouts in Texas this summer. What's that about, and what does he suggest? The U.S. investing billions of dollars in Central America, with hopes economic prosperity will reduce illegal immigration to the U.S. What are the obstacles? The conflict in Ukraine is only part of the picture when it comes to food shortage. What's the other part? That and much more coming up on NTD Business. Great to have you with us. Chenny Wu here for NTD Business. Greed and collusion could lead to rolling blackouts in Texas this summer. That's the message from energy expert Ed Hers. He says there isn't enough energy to go around. But instead of building more generators, businesses are happy to reap the high prices. In Texas, when energy demand is high and supply is low, prices rise in real time. Hers says that the system should be scrapped because it's harming consumers. But he claims the Texas grid operator and even the Texas legislature have been captured by power companies and commodity traders. Hers teaches energy economics at the University of Houston. We saw blackouts in Texas in 2021. At the time, experts blamed a rushed transition to less reliable renewable energy sources. Hers agrees Texas needs more battery capacity before it can rely on wind and solar. As we head into the hot summer months, he's warning Texans to have an ample water supply and a way to cool off. ERCOT, the state's grid operator, says it's not expecting any energy shortage. The Biden administration wants to standardize electric vehicle charging for the network of charging stations it's pledged to fund. It's trying to get more Americans to switch to EVs, and a nationwide network of fast, reliable charging stations is critical to that goal. It's funding 500,000 stations around the country, and the new proposed rule would require them to be interoperable, just like how a gas pump works with any gas vehicle. Currently, the electric vehicle world uses 3 different charging standards. The charging stations would also have to have at least 4 ports capable of charging 4 EVs at the same time. The rules would also bar charging stations from requiring drivers to have a membership to use them. About $5 billion is going to states to build the charging network along American highways. By 2030, President Biden wants 50% of all new vehicles sold to be electric or plug-in hybrid electric models. He also wants 500,000 new EV charging stations. President Biden also hosting the Summit of the Americas in Los Angeles this week. At the event, he talked about the record number of illegal immigrants trying to enter the United States. A key part of his solution is to help develop Latin America's economy so that they won't need to come up. NTD's Faye Corder looks at some of the obstacles his plan will face.
But all unlawful migration is not acceptable.
President Biden unveiled the Americas Partnership for Economic Prosperity at the 9th Summit of the Americas, an event where leaders of North America and South America gather to discuss the challenges and opportunities their people are facing. And a key part of Biden's plan is to decrease unlawful migration into the U.S. by helping to develop the economy of Latin America. The idea is Latin Americans won't need to move up if they're prospering where they are.
We together have generated more than $3.2 billion of investment in the region.
By the region, Harris is referring to the Northern Triangle, which is made up of Guatemala, Honduras, and El Salvador. Around a quarter of unlawful migration comes from here, and migrants from South America have to pass through on their way up north. U.S. companies have pledged to invest $3.2 billion there to create jobs, give people the internet, and involve them in the banking system.
Foreign aid actually has a perverse effect because it actually promotes corruption, cronyism. It doesn't build an independent economy.
Fergus Hodgson is the director of Econ Americas, a research firm that focuses on the Americas. Hodgson doesn't see the connection between giving more aid and economic development.
This aid will go through, or investment will go through all sorts of crony channels, right? So it'll be tied with government projects. It will not be just a pure independent investment in the economy. These people are being baited with crony relationships.
Corruption is a big obstacle in Biden's plan to revitalize the region. It takes forms such as bribery, stealing public goods, and even working with criminal gangs.
There are many ways that the government, if they control everything, which in those countries, unfortunately, they do, would be able to get their hands on this money.
David Schwartz is the president of FIBA, an international banking trade association. Schwartz specializes in Latin America and says it'll be an interesting challenge to keep that money away from corrupt officials. And there are other obstacles too.
People is having this idea that the United States, by trying to support anti-corruption efforts, is actually undermining sovereignty in these countries.
Paz Gomez is a market analyst at Econ Americas. Gomez says natives may feel the U.S., a foreign country, is too involved with their institutions and is imposing its ideologies on them. Faye Quarter, NTD News.
In the U.S., household wealth dropped for the first time in 2 years during the first quarter. That's according to a new report by the Federal Reserve. The main reason why Americans are less wealthy? A drop in the stock market. $3 trillion were wiped out. It offset a rise in real estate values. Those climbed another $1.7 trillion. This is the first decline in household wealth since the first quarter of 2020. That's when pandemic lockdowns shook financial markets. Despite the drop, households still have more money than before the pandemic. But the stock market is still weakening. That means Americans' wealth will likely take another hit in the second quarter. And weaken it did today. Stocks ended sharply lower, led by the NASDAQ. It fell 332 points, or 2 3/4%. The Dow lost 638 points, or nearly 2%, and the S&P gave up 98 points, or 2 4/10%. Oil prices slipped a little, but remained high. WTI at 121 and Brent close to 123. The national gas average price topped $5 a gallon today for the first time ever. The Labor Department will release the latest consumer price inflation data tomorrow. Many will watch it for signs that inflation is peaking. Across the pond, inflation is also running at a record high, and it's still rising. The European Central Bank said it will raise interest rates for the first time in 11 years. On July 21st, the central bank will raise interest rates by 25 basis points for the 19 countries that use the euro. It will hike rates again on September 8th. Here's the ECB's president.
High inflation is a major challenge for all of us. The Governing Council will make sure that inflation returns to our 2% target over the medium term.
According to Reuters, some policymakers had advocated for a bigger hike in July, but in the end they yielded. Initially, the rise in inflation was driven by energy and food prices as economies were coming out of lockdowns. But Russia's invasion of Ukraine has accelerated it. And here to talk to us about the European Central Bank's decision, inflation, and food shortages is Daniel Lacalle, chief economist at hedge fund Tressis.
Daniel, thanks for joining us. So the European Central Bank is to raise interest rates by 25 basis points. It's the first rate hike in 11 years. So first off, I want to get your thoughts on that. What is your reaction right now in light of this?
I could say it's a disappointing and slow move, because if you think about it, the European Central Bank at the same time has significantly increased its inflation expectations. So only hiking by 25 basis points is very, very behind the curve, in fact, and extremely concerning, because it looks like the European Central Bank is looking at the possibility of delaying as much as possible the very needed normalization of monetary policy. In fact, it is also looking at options to curb the possible increase in the yield of some of the sovereign bonds, which sounds to me like a very, very dovish position.
Now you mentioned it's behind the curve, but there's concern that with the war, sanctions, and uncertainty, the European economy is going to slow down even without raising interest rates. So the inflationary pressures are going to come down anyways. So then, is the ECB facing a tough balancing act in light of all this?
It's a very good question. The ECB is stuck between a rock and a hard place. On the one hand, if it normalizes as it should, the risk of seeing higher sovereign bond yields is important. But on the other hand, if they don't, inflationary pressures will persist because it's not just about the war or supply chain disruptions. So the monetary effect of those inflationary pressures has to be dealt with and quickly.
Now, on the point of inflation, food prices are rising and there's concern of a shortage. Now, you've written an article on the Epoch Times. You say, besides the Ukraine war, a possible reason for a food crisis is government intervention. Now, this is interesting to me. Can you explain to us why that is?
Well, think about this. Even before the Ukraine war or the pandemic, the agricultural sector in developed economies has been suffering from elevated taxes, increased environmental and regulatory burdens that have made it uneconomical to produce grain in numerous developed economies, particularly in the European Union. So now the problem is that many of those farms and many of those crops around the world simply cannot come back to the market and reduce the risk created by the Ukraine invasion because it is uneconomical for them, even with the elevated wheat, barley and other cereal prices. No?
Now, on this point of being uneconomical, can you give an example of a government policy that's led to this?
Oh, let's think about, for example, the increase in fuel taxes, the increase in CO2 taxes in the European Union, the increase in the cost of labor coming from higher labor taxes in the European Union. So a lot of small things that have been added over and over. But if we think about figures from 2018, German, French, Spanish crops were loss-making even before the pandemic.
I'm curious, just for a contrast, how does the US and Europe compare in terms of government intervention?
The US is a lot less than Europe. In the US, labor costs are much lower than in the European Union. The US does not have CO2 as a tax. In the United States right now, everybody's extremely concerned about $4 a gallon. Anybody in the European Union would feel privileged to see those prices, which are almost half what we're paying in most European countries.
Now, a food shortage, there's many parts at play here. I'm wondering if you could tell us what can be done to avoid a shortage.
It's very difficult. It's complicated, but the only way to alleviate a food shortage crisis coming from an invasion of one of the top producers like Ukraine is obviously to diversify as much as possible into other possible suppliers.
Daniel Lacalle, Chief Economist at hedge fund Trices, thank you for coming on.
Thank you very much.
Whether it's a PlayStation, Nintendo, or Game Boy, in order to play the game, you had to get your hands on a game console. That's how it's been for decades. But now, one of the biggest console names is making their games available right on your TV, meaning you no longer need to buy the hardware. NTD's Phil Zhou has a story.
Xbox, one of the most popular video gaming brands, is allowing gamers to enjoy their Xbox games even without a physical console. Its parent company Microsoft is launching its Xbox TV app on smart TVs, starting with Samsung's new line of 2022 smart TVs. Customers who subscribe to Xbox's Game Pass Ultimate, which costs $15 per month, will get access to over 100 Xbox games right on their new Samsung TV.
You know, what Microsoft with Xbox is doing just makes complete sense to me.
I spoke with Bob Bilbrook. He's a video gaming industry veteran and is currently the CEO of business firm Capture.
When you remove the hardware element of the Xbox and go to a pure streaming on a TV or cloud gaming, then it just becomes easier.
The Xbox TV app will work pretty much like Netflix does on Samsung TVs. Players can connect a range of controllers via Bluetooth, including Xbox controllers, Sony's DualSense, and more.
It naturally transitions them into that metaverse geared gaming space and the Web 3.0 world that we're all moving towards.
The Xbox TV app will be available on smart TVs by the end of June in almost 30 countries. Phil Zhou, NTD News.
Spotify says its $1 billion bet on podcasts is starting to pay off. Yesterday, it said it brought in roughly $215 million in podcast revenue last year. NTD's Sean Marshall has more.
Some may also think that we're a bad business, or at least a business with bad margins for the foreseeable future.
That's what Spotify CEO Daniel Ek said at an Investor Day speech on Wednesday. Spotify made $215 million in podcast revenue last year, although it invested $1 billion. The CEO says the investment is already paying off.
So from everything I see, I believe that over the next decade, we will be a company that can generate over $100 billion in revenue annually, and that we can achieve a 40% gross margin and a 20% operating margin.
In just 4 years, they've gone from 65 markets to 183 across the globe. X said they continue to use a 3-part formula. It includes making Spotify available to anyone on any device, personalization, and free service. The $200 million multi-year licensing contract with Joe Rogan showed people Spotify's commitment in investing in music alternatives. Spotify just needed to let out their plans on why they're investing so much. Sean Marshall, reporting for NTD Business News.
Still to come, Uber Eats offering nationwide shipping from certain cities. That means you could get a New York pizza in Miami. Planning a summer vacation, we have tips on how to avoid racking up more debt without skipping the fun. That and more coming up on NTD Business. Welcome back. The next phase of food delivery is expanding. If you live in Florida but crave a New York bagel, you're in luck. Uber Eats is now offering nationwide shipping. You can only order from 3 cities right now: New York, Miami, and Los Angeles. But Uber Eats says it wants to add more cities soon. The delivery app says consumers have been asking for new offerings. To order, just choose nationwide shipping in the app when you go to place your order. Deliveries will be made via FedEx. There are also other companies that currently offer nationwide shipping, including Goldbelly. McDonald's is offering it to help Georgia workers with their student loan debt. A local media reports the fast food restaurant has launched a student loan forgiveness pilot program. It's in Metro Atlanta and Northwest Georgia. Employees can apply to have $1,250 paid directly to their student loan lender. Workers in 264 franchise restaurants across the northern part of the state can apply for the program. But they must have worked at McDonald's for at least 90 days and are only eligible to participate once a year. No word on if McDonald's plans to extend the program to other locations in the U.S. The Federal Reserve's monthly credit report, released Tuesday, found consumer credit surged last month. And with the summer travel season underway, experts say it's likely more people will tap into credit cards to afford vacations. But how can you avoid slipping further into debt without skipping the fun? Here are some tips.
How are you paying for your summer vacation? A new report finds Americans are relying more on their credit cards for many expenses. Consumer credit surged by $38 billion in April, according to the Fed's monthly credit report. It comes amid the highest inflation in 40 years, with prices for gas, hotels, and plane tickets surging. In April alone, airfare spiked 18.6% over the previous month, according to the Bureau of Labor Statistics.
These are things that really we have no control over. However, there are ways that we can save money.
Financial expert Julie Almataveras says the first step to avoid getting deeper into credit card debt this summer is to create a vacation budget and actually stick with it. She recommends prioritizing activities on your trip.
If you're spending $300-400 on extracurriculars, maybe those are the things that you want to reduce so that you can make up for the expenses that we cannot control that definitely are going up in price.
Another tip is to consider a group vacation to split those high prices with friends or family. And get creative when it comes to using reward credit cards. Look to see if you can use your points to pay for things. Also, realize that getting the best deal possible could mean traveling during off-peak times.
Everybody wants to get out the house, and of course we want to travel, but really being flexible is going to help you because there are places that are going to be more expensive.
And finally, be realistic. If a vacation doesn't fit your finances this year, skip it and start saving for next year.
In the wake of a record-breaking Memorial Day weekend, thanks to Top Gun Maverick, movie theaters are facing a new dilemma. Popcorn. Experts are worried a popcorn shortage could be around the corner. That's not just because some farmers are growing less corn in favor of more profitable crops. Shortages in other areas are also at play. Suppliers are having trouble getting the lining that's used inside popcorn bags. Everything from those bags to the oil used to pop the corn and the glue used for the boxes that hold that oil are at risk of supply chain issues. Since theaters sell popcorn at massive markup, they rely on it and other concessions for most of their